The topic is final accounts with adjustments, and this module is continuity of the earlier module in which we discussed trial balance and its adjustments. And in this module, we will learn how to read trial balance, how to put concentration on the trial balance, and in this we will learn ILO. Okay, so ILO. Well, the ILO in this trial balance is to mark A for asset, E for expense, I for income, L for liability, and O for owner's equity items. What we see that in trial balance, cash in hand is asset A. Put mark A. Bank A. Debtors A. Yes, owners, this opening stock. Opening stock is not an asset, remember. This opening stock is in fact the stock that was an asset with us in the previous year. Now, this opening stock is our expense because this is the stock that will be sold prior to any other inventory item. So, if we are having sales income with us, which is, you see, 230,000, it means that this stock of 62,000 has been sold out. Okay, and then we have 140,000 purchases as well. Okay, so this 62,000 opening stock will be marked as E for expense. Furniture is asset. Accumulated depreciation appearing in the credit side, mark minus A because it is contra to the asset. We have already discussed this thing. Well, in this, the technicality is that equipment, 16,000 appearing in the debit side, and its accumulated depreciation is appearing outside the trial balance. This is the area outside the trial balance. The area inside the trial balance are debit and credit only. So this 4,000, we will mark minus A for this because it will be subtracted from the cost of the asset. And this is, we have already discussed as a tip in the earlier module that it is our net book value. Building, it's written that its cost, okay, its cost. And in the adjustment, we have read that this was purchased during the year. That's why its accumulated depreciation opening balance is not appearing in the trial balance. Well, motor car, its cost is 30,000. It means this 20,000 is its net book value appearing in the debit side asset. Sundry creditors, liability. Loan from Bhutta is liability. Provision for bad debts contra to asset, okay, minus A. Then purchases expense, purchases return minus E. Okay, contra to expense. I for income and minus I contra to the income sales return. Salaries go down. Rent is expense. Then comes interest on loan from Bhutta appearing in the debit side. Obviously, any information that will be appearing in the debit side would be asset or expense. So this cannot be your asset. This is your expense. Why I'm saying like this? Because sometimes people get confused that this terminology, oh, what to do? It is loan from Bhutta, interest, might be it is income, no, it is loan, liability, what to do? The only thing is, don't say, just see, it is in the debit, yes, it would be asset or expense, and that's it. Now take your decision. This interest should be asset? No. Then it is expense. Mark E. Okay? Good. Well, rates and taxes, again, no worries. If these terminologies are new for you, at least debit of the trial balance is not new for you. Okay? So just use accounting logics now. Your accounting logics are telling you that any information appearing in the debit side of trial balance would be asset or expense, and that's it. So this rates and tax is your expense. Okay? So relax. Good. Well, So discount allowed is expense. Yes, you know it very well already. Good, great. And discount received is your income appearing in the credit side. Freight on purchases. Don't say, oh. Again say, yes, appearing in the debit side would be your expense or asset. So yes, it is expense. E, good. Carriage inwards, expense. It is your carriage expense. Carriage outwards, don't think too much. Yes, it is your expense appearing in the debit side. At least over here, while reading the trial balance, you should not get confused, okay? So trial balance, carriage outward is your expense. Okay, now come, what is carriage inwards and what is carriage outwards? Inwards. When you purchase goods, you pay carriage to bring goods inwards your business. And when you sell goods, sometimes your customer requires that please deliver these goods to me at my place. So in that case, you are paying carriage outwards. Okay? So simple, logical answer. Okay? So no cramming, no worries. Well, then drawings. Drawings is minus O, means it is contra to owner's equity appearing in the debit side. That's fine. Printing and stationery is an expense. That's good. Electricity charges appearing in the debit side of a trial balance. Yes, it's expense. Insurance premium. Again, you are confused. Why? Just because premium is new word? Come on. Insurance premium appearing in the debit side. Now tell me, should it be asset? Can you say that there would be economic benefits associated to this insurance premium for the upcoming future years? No. Premium by default means annual amount against the insurance. So premium is the amount of installment, you can say, that you are paying to the insurance company and that you will keep paying each year. So premium is for 1 year, remember. So if it is for 1 year, it is your expense. Okay? Cannot be your asset. General office expenses, again, it is your expense. Bad debts, it is your expense. Bank charges, expense. Motor car expenses are also expense. And capital account, it is owner's equity. Okay? So we have marked A-low. Okay? A-low. Well, so both sides are equal. And now tips to remember. Okay, the ITTRs. The ITTRs to this module that mark A-low. Okay, so this is the only ITTR that you have to remember to mark A-low. Thank you.